When I was a kid, like really small kid, all my money used to be with my grandma. She kept all my money because I never needed that. Right? But then it was still my money. So my grandma kept a track of it. She collected all my money. And when I grew up a little big, she gave me my money, all my money. But then I thought then I wanted my own piggy bank. So my dad bought me my own piggy bank, which was usually filled in with just the coins, and then after some time I started putting in currency notes. But then again, when I grew a little older, I did not want the piggy bank. I started keeping my money in a locker. So with the age, my needs, my requirements, my wants changed, and so did the safe deposit of my money. Initially it was my grandmom, then the piggy bank, and then my own locker. Similarly, in real life situations, in real life, people have got different needs, different kinds of people, their requirements are different, their needs are different. So the banks have actually got different kinds of deposits to cater to the needs of different kinds of people's requirements. That's exactly what we are going to learn today. The classification of bank accounts. Right? Now, we understand what is a deposit. The money that we keep with the bank, that we deposit with the bank. What does this bank do with all the money? It's actually a custodian of our money, right? It is a safe house wherein all the money of people is kept. Now, what does this bank do with this money? It lends this money to individuals, to business houses who are in need. And when I say it lends money, obviously it earns interest from these people out of the lending. Now, what does this bank do is, because it is earning interest on these people's money, it is also sharing a part of this interest with the people whose money it actually is. Right? So, it deals in a lot of transactions with these different accounts. Just like the transactions are done in ledger accounts. The bank also does a lot of transaction in these accounts. And to cater to the different needs of different kinds of people, the banks have classified the bank accounts in 4 categories. So the first one that we've got here is savings bank deposit, right? Which is where, in just one line, I'll explain each one of them. Savings is, it acts like a saving account. It earns interest, right? You keep in money and you can withdraw it as and when you want. It's just one simple definition that I'm giving you of each of the accounts. The second category is our current account. Current account would not earn interest. It's just like a current account. You put in money, you take out money, you put in money, you take out money. It's like that. It doesn't earn interest. Then we've got fixed deposit bank account. So what happens in a fixed deposit? The money is fixed. It earns higher interest than your savings account. So the money is fixed in there. And the last category is the recurring deposit account. So a fixed amount of money is always deposited in this account. You cannot withdraw it. And at the end of the maturity, what happens? The money is transferred to your savings account. You earn a good interest in the recurring deposit account. So this way, the bank has majorly classified the accounts into these 4 categories, and we learn about each one of them in details. But whatever we've learned today, hope you've understood all that. Thank you so much for joining me.